Hi, everybody, and welcome back to Bear Investing. So, if you're new to my channel, this is just a place where you can follow along with my investing journey as I try to build a dividend portfolio to create a passive stream of income so that one day I could hopefully retire and live off my dividends and live off the passive income that I generate. So, please subscribe to the channel, leave a like, and leave a comment if you just want to follow along with the journey. And you can follow my buys and sells from week to week and also news about different stocks that I hold or major stock market news. So with that said, I'm going to be going into the Bank of Canada raising interest rates and how that's going to affect you, and also talk about Tesla and big news from one of their major competitors. And let's get started with the RRSP account. So this is a smaller account. I have $313.90, or down $16.15, or down 5%. I only own Starbucks in this account, so I keep dollar cost averaging into this. So I'm a little up over 3 shares now since buying this a couple weeks back. And the reasons why are the strong company. It's a very strong brand, good company. They're opening a lot of stores. They raised the dividend at a very high rate. The reason why the price went down is because they have a lot of stores in China that they're trying to open up for growth, and China's locked down. So that's definitely going to impact them in the short term. They also have fears about their workers banding together and starting a union, but there are many companies that are facing that at this moment. So we have Amazon, we have Google, we have Apple. So major companies are having this threat. So it's not just affecting Starbucks. This is just affecting many companies today. But I believe if you have a strong business and you have the ability to raise prices, have strong pricing power, I believe Starbucks does, because, I mean, let's face it, what other coffee shop would you go to where you spend $6 on a coffee? I can't really think of one, right? Like maybe a small one locally, but none around me. So it's basically just Starbucks or bust, and no other coffee compares to it. At least anything from the major chains. So Starbucks will have the ability to raise their prices. So your $6 coffee might turn into a $7 coffee, and it's a very popular brand amongst teenagers. So that I think it's the third favorite restaurant of all teenagers after Chick-fil-A and Chipotle. So that's a very good sign, because they're going to be future customers. The teens of today are going to be tomorrow's adults and going to be your future customers for generations, and they're going to feed your company and fuel your dividends. With the TFSA, we're up to $13,496.09. So we're up $79.55, or up 1% in the past month. Today was a green day. Everything's been kind of red for a while, but today's finally been rebinding. But I've been loving buying the lower stock prices as the prices dip. Again, more shares of wonderful businesses, more dividends. I get to my goal of living off my passive income that much faster the lower the price falls. So a red stock market is fantastic news for me. If my stocks go up, well, I mean, that's nice, but it doesn't really help me reach my ultimate goal, because I'm not selling my shares for the most part. I want to hold on to these businesses and just take the dividend and passive income that they provide for me. And I don't have to sell a single share if I don't want to. So let's get into Apple. So Apple is another one of these companies where, teens that were surveyed in the U.S., 87% of teens in the U.S. have an iPhone as their phone. So that's a very good trend going forward into the future, because, when people buy an iPhone, they usually keep buying iPhones. Sometimes every single year, every time they release a new one. So when you invest in a company and you try to look forward to the future, pay attention to what kids and teens are doing, because they're going to be your customer base in the future. So if you're projecting future growth with companies, you have to look into what the younger generation is doing. Those are your future customers that may or may not make your wish or your investment thesis in a company come true. And AQN's in the green, which is great. And the banks are recovering a little bit, but they're still in a major dip. And there's actually an announcement by the Bank of Canada, so they actually increased interest rates. So I'm going to be playing a clip from the news just going into this subject.
Canadians' finances have been getting squeezed from all sides. Now interest rates are heading higher too.
People are in panic.
Mortgage broker Rasha Ingrata created a Facebook page to communicate with her clients and try to calm their concerns.
They're thinking that their payments are going to go up drastically.
Lenders are already passing on the Bank of Canada's first hike. Variable rate debt that's pegged to prime is going up. Take a $400,000 variable rate mortgage. A quarter-point increase adds about $50 a month. If there are 5 more of the same rate hikes this year as markets expect, that jumps almost $300.
The economy is doing well. We no longer need the crutch of such low interest rates.
So the central bank is raising rates to cool borrowing and hopefully inflation too.
To bring inflation down, unfortunately, we have to cause some economic pain, and it will take a series of interest rate hikes.
Supply chain disruptions, higher consumer demand, and energy costs are driving prices up. Plus, the Bank of Canada says the unprovoked invasion of Ukraine by Russia is a major new source of uncertainty that will add to inflation around the world.
So yes, the increased interest rates are going to increase the cost that people have to pay on their mortgages. Now, I'd love to know where people are getting these $400,000 mortgages, because in Ontario, I believe the average mortgage is a little over $800,000, but that's besides the point. Paying an extra, $50 or even $300, a couple $100 a month extra unexpected when you're paying more for food and gas and just all your day-to-day essentials is definitely going to have a negative effect on people and their finances and definitely their discretionary income. But the banks do have to raise interest rates. It's definitely the right thing to do. It's just a delicate balancing act. If they raise the rates a little bit too fast and too much, we could enter into a recession, which isn't good. But having our assets and even our food inflate to ridiculous levels, to where the average income of a Canadian doesn't increase that much, but the cost of everything just keeps climbing higher, is making this tough. So there's really no choice here, and we just have to accept these rate hikes, and we'll see what that does in the short to medium term. But long term, even if it causes a recession, inflation is just out of hand right now. So they got to do what they got to do. And so with the rest of the positions, we didn't really change anything with our income funds. So these are just providing income to our portfolio each and every month. I did pick up a little bit more ENS. So I'm up to 60 shares of this. So more Enbridge, more income. ETHY, I picked up 1 share. So this is a way to get cryptocurrency exposure. So we get a very high dividend yield every single month from this, and it's a very volatile asset, so I definitely want to be paid while I wait on something that's really high risk like this, but I definitely want to get cash flow. And it's a small position in my portfolio just due to how volatile and completely unpredictable it is. I did buy a little bit more Google. I think it's at a great price, so around 2,600. I like averaging into this position a little bit more. About 2 more shares of HYLD, bringing us up to 45. So this is 7 US listed ETFs that give us a over 10% yield every single month. So this is a fantastic way to get exposure to the American market, get paid in a different way, similar returns to the S&P 500. You're just paid in, passive monthly income. You can reinvest that as you please. You can even take it out and spend it as income if you're at the stage where your portfolio is giving you enough dividend income that you can just pay for all your expenses. And I picked up 2 more shares of Intel, so we went from 12 to 14. I just like everything the company's doing. They're building this chip making facilities. They're taking top talent away from other companies. They're making really compelling products that is, pushing AMD to release, more competitive chips and even lower the prices of their existing chips on the market. So Intel is doing fantastic. I just like all the actions I'm seeing from the company. It's one thing to say that you're going to change the business, but I'm seeing it every time I read news about Intel. I'm just seeing this this goal happen of, becoming this chip making facility for other companies, and it won't matter who makes the best CPUs if Intel is just making a ton of cash, just making chips for Amazon, Qualcomm, even NVIDIA is talking about maybe using Intel's fabrication plants to make their chips. So just a great thing for the future. So I think Intel is going to have trouble for the next couple years, but I'm just going to collect my 3% dividend. And I think after about 2026, when their capital expenditures will go down because they're not, spending $20 billion to build chip making plants all the time, the cash flow will start flowing in. Intel will be a cash flow machine. And we bought a little bit more Microsoft, so I like averaging into this. It was in the low 280s, so looks like it's bouncing back a little bit as most stocks did today. And I bought a little bit more Tesla, so actually pretty interesting news about one of Tesla's competitors. Ford is no longer selling the Ford Mach-E in the US, so it's been removed from their website. And, this is probably Tesla's most major competitor. And the fact that they can't even produce a vehicle is very, very sad. So like you have GM selling 26 electric vehicles in 2021, and you have Ford, who actually make a good EV. The Mach-E is a very good electric vehicle. It's probably the second best electric vehicle. Like after Tesla, I'd say Ford is number 2. If we're not talking about Chinese brands. And then the Chinese brands like Geely and BYD and all those other brands, they are shut down because China has shut down production. Like NIO said they're not even going to be making any cars for some time. So I'm just seeing that all these other automakers are just tripping over themselves, not being able to, secure the supplies, and just coming up with excuses as to why they can't sell cars. Meanwhile, you have Tesla just beating their earnings expectations and growing, and they have so many orders. Like they can't even fill all the orders, but they are still growing. They're producing as many vehicles as fast as they can, and they're definitely ramping up their numbers. They're growing so fast each year. And another thing from that survey is that high oil prices and the environment are something that teens are worried about. It's one of the top things they worry about. So if you look into the future and look at the youth and what they're concerned about, well, Tesla helps with the environment because, you're not going to have these internal combustion engine vehicles releasing these toxic fumes into the atmosphere. And you're also helping with high gas prices because you don't have to put fuel into a Tesla. And if you just like close your eyes for a moment and think electric vehicle, which brand comes to mind first? Now, to me, that's just Tesla. And that is just a great way of knowing that if you're the first brand that people think about, like, okay, like I want to drink a can of pop or a can of soda. What do I think about first? Coca-Cola. That's going to be the first thing I think about. So Tesla, that brand recognition is very strong, and they have a very loyal cult-like following, very similar to Apple. So they'll get you into your ecosystem with their brand. They give you updates to your car pretty much every other day. You'll have the most up-to-date software, so great software company as well. And I'm so optimistic about their future just because their competitors are so inept, they can't even make a vehicle. Like, that's just sad. And that's their competitive advantage is the fact that the competition is so bad. Like, they are just so far ahead. They're playing chess. Everybody else is playing checkers, or not even. They can't even play checkers properly. They probably don't even know the rules because they can't even produce any vehicles. And if we go to the dividends earned since my last update, where you've earned $451.44 in passive income since starting the portfolio. Each year we're earning $689.72. Every month we're up to $57.48. So We were around 56 something last week, so pretty good progress there. And last week we made $1.86 per day. Now we're making $1.89 per day. So we're 14 cents away from hitting $2 a day in dividends. Now we're just 11 cents away. So with each deposit, with each dividend coming in that I'm reinvesting, we're getting closer and closer to that goal. We've earned $51.64 so far in April. We should exceed what we invested back in January. And I am going to be receiving a dividend from both Scotiabank and TD Bank for about $13 from both of those. So we should be over the $70 mark this month, which would make this our highest month of dividend income so far, which is great to see. And it's just going to continue into the future, and we're just going to make new goals to keep ourselves motivated and depositing into this account each and every month as I get more money. So if you haven't joined Wealthsimple yet, now's a pretty good time just because the market has been down for quite a while. So good chance to get some cheap stocks. If you sign up with my link in the description below, you can get the value of a free stock worth up to $4,500. So feel free to do that. And if you've watched the entire video, please do subscribe to the channel, like the video. It does help the video reach more of an audience, and please give me your feedback in the comments down below. What are you buying? How's your portfolio doing? All right. Have a great day, everybody.